What is up, everybody? You're gonna have to apologize for the quality of this recording. I am out of town on a laptop with just a built-in microphone and everything, so it's gonna sound a little bit more poor than usual. So I'll keep this one short. We only took, I think, 2 or 3 trades today. I think I took 3 trades, and then I took a couple options later in the day. So we'll discuss 4 trades total then. Again, I would, especially today with the quality of this recording, I would definitely advise you to go check out my Twitch, twitch.tv/professor_Palmer. I'll link it in the YouTube description, simply because, we discuss things at a much more significant length, kind of as they happen, as we took the trades and what have you this morning. You can skip around. Obviously, you don't need to listen to all the dead time or whatever, but it's definitely going to be a better quality resource for today's trades than this video. But I do like to do my trade reviews, and yeah. Without further ado, I guess we'll go ahead and get started. Now, my money is still in Webull purgatory, so I'm still waiting for that to get moved over. I'm hoping that Monday or Tuesday I should be back to trading in full form. So I'm looking forward to that. I did put in my resignation at work today. So June 14th, not this Monday, but the next, will be my final day at Chuck E. Cheese. As I make the leap into full-time trading, maybe somewhere down the line, if I have the time and I feel comfortable with it, do some teaching or something. I don't know. But your boy has consumed melatonin, so our time is limited. Let's go ahead and get started here. Again, you might want to turn this video down. You're probably going to be hearing a lot of background noise and stuff. But the first trade of the day was going to be, well, first of all, I chased LEDS a whole lot. Oh, that's not correct. LEDS. Yeah, I chased LEDS a whole lot, and I tried to make a bunch of different zones. We talked about the sharpness of trend, which is a thing I talk about a lot, and it was very, very pertinent on this ticker this morning. It was a very, very good example of that. We ended up, I tried to fill zones all the way up in here. It just wasn't pulling back enough. It was doing too much trading sideways. So we did eventually get a fill and have a good trade on it, but it took 1, 2, 3, 4 different zones or whatever in order for me to finally get one that was going to work, that I was okay with. But we'll discuss that, I guess, here in a little bit. The first trade we actually did and called out in chat was going to be BBIG, and that was going to be at 847. 847. So BBIG here at 847, that would be right at this candle. So right in between this candle and this candle, we called a zone out in Discord at 4 down to 3.9. So 4 was the top of my zone. Pretty easy to identify zone there. Oops, that's the wrong one. Sorry, getting used to this tiny keyboard. So 4 was my first area, and 3.9 was my second area. Now, obviously, how did I base those zones? The whole dollar is a pretty key level here. You can also come and look over on the 10 and see that it had some confluence there. More so on the 5. You can see that 4 was a significant level on the 5. So, whole dollar, multiple interaction on the 5, all good signs. 3.9, we had, this candle right here. We had some action over here, as well as it provided me a higher low to pull back to. So 4 to 3.9 is the zone we ended up choosing. Again, we chose it up in this price action over here. So it ended up taking, another 10 minutes or so before it did to our zone. And when it did, it filled literally perfect to the cent. Perfect to the cent zone called, 10, 15 minutes ahead of time. And we got a high day run out of it. Now, I discussed this trade because as it was happening live, I obviously, was not holding for high of day. I was assessing, oops, it'd be better to do it over here. I was assessing these areas for my 3 profit targets. So immediately it pops up here. Had I had my full account and the full freedom that I usually have. Oh, by the way, my stop was right down there. So you were risking 10 cents essentially, with the first profit target being at about 17 cents. So a little bit better than a 1.7 to 1 ratio on that one. You could have scaled out even at 4-1 for 20 cents if you were really that worried about it. But it popped through here immediately. I mean, it never went against you. This trade, you literally got filled at the absolute bottom to the cent, and it never went against us here. Now you look at the chart for confirmation of strength, and you see that the 2-minute chart is respecting the 20. Price came below it and got pushed back above the 20. That's a very bullish sign, especially considering the next candle was taking up more than half of the previous candle's body. I usually consider that pretty bullish. It's a quick bounce, and almost within that first candle, you could have taken up your first profit target. But you come over here and you look at the 5 and the 10, which really tell you the meat of the story on this one here. So you see on the 5 here that you're getting a wick to fill the zone, and then a close above. I'm sorry, in the 10, a wick to fill the zone, and then a close above VWAP, which is picture perfect. That's how you want it to always go. Same thing on the 5 here. You had a long wick to fill your zone and a close back above VWAP for strength. You love to see that. Those wick fills mean that price dipped and buyers stepped in to buy it back up at the good opportunity. So when you see your zone fill and it wick like this, that means that a lot of other people were looking at value entries at the exact same spot. So anyways, it broke through the first profit target. You could have scaled. If you're comfortable and you saw this really strong confirmation of strength here on the 5 and the 10-minute chart, as well as, and I drew this on my stream as well this morning, as well as you could have drawn this, right? This trend line support, and you could have realized that this candle here was essentially basing off of, let's see if I can move this. Yeah, this candle was essentially basing off of trend line support. You see that there? Gorgeous. Beautiful. I know it's a lot of lines. I apologize, but touch of the trend line support and rally out with all of those other strong signs, this would have been a picture perfect opportunity to double your size at this first profit target. And then you could have rode, obviously to high a day, but if you were taking your next profit target, you could have doubled up your size and ended up squeezing 25 cents out of that, or 30 cents out of that. Or if, obviously in the perfect world, you hold to the very top, you're looking at a 40-cent move, over a 47-cent move, and the ticker's range for the day was only 60 cents, 62 cents, something like that, 63 cents. So you're talking about a 42-cent move on a 63-cent range on the day is absolutely nuts. I mean, that's like 70% of the ticker's overall movement of the day, and you managed to get most of it. The only thing we missed about 14 cents of that. I'm sorry, 24 cents of that. No, wait. My math is terrible. 16. I'm tired, guys. I'm tired. The point is, it was a great trade. I'm so sorry. It was a great trade. Obviously, I would have never held for that. I would have scaled out multiple times, especially if I considered adding to a winner here. I probably would have scaled out and full up here, just on the off chance that this volume is bigger than over here, which tells me that, this could push even higher. And you see where this volume came in. So this volume is actually right here at the test of high of day. When you see volume come in at the high of day test, that's a really good sign for a breakout. But up until that point, you were looking at what was actually less volume on the rally up. So I probably would have doubled my size, tripled my size, something like that here, moved my stop to break even, since I was confident that my entry was as good as it could have possibly ever been. I'd be comfortable adding size, especially with all these, all the confirmation we saw from all the other charts that we already mentioned, as well as this trend line support. You would add to your size here, and then you would you would sorry, they're like yelling at the dogs. You would add to your size here, and then you would scale out probably up here. That way, you're not risking the potential interaction at the high of day. Now, if you were in the move in during this candle and you caught this pop up, sure, of course you can sell up here. But I don't know that I would have held much further than this candle that kind of pushed us up to high of day right here, and you could have doubled your size and ended up taking 25-cent moves with twice the size. That would have been just really attractive trade. But yeah, I mean that is the zone here. Picture perfect fill. That is your that's your risk. Saw the PTs. Really proud of that one today. That was a good one. The next one I watched was I called 1, 2, 3 zones on LEDS. 3 zones on LEDS, but we actually called an EFOI zone that ended up getting filled before that. And this one was actually a loser. This one was actually a loser on the day here. The chart is doing some wilds. It looked like it had the potential to go. Let's see. Yeah, you look at this trend line action here, and you know how I love my trend lines. I mean, that looks like a pretty good trend, right? Looks like a pretty good trend right there, at least on the shorter time frame. The higher time frames, it's a little less attractive, especially the 10. Excuse me. But yeah, I called EFOI 5.9 to 5.8, and that was going to be at 9.01. So right up here in this action, I called 5.9 to 5.8. So we were all the way up here when I called this zone out. 5.9 to 5.8. So this was my zone here. Now you'll notice that my zone is incorporating trendline support as well. So I was taking the bounce off of trendline support with a good zone based on previous price action. So yeah, I mean, I like the look of this trade. As it started to come down to fill my zone, though, I did mention on my Twitch stream that I was liking the trade less and less as it was coming to be. Like on the short-term time frame, sure, this doesn't look so bad, right? Because it looks like it could just run into the support and rally. But if you look at the way that it came down on the 5 and on the 10, you see these huge candles. I mean, this is almost a tweezer top. This is almost a tweezer. I mean, these are reversal candles, right? So as it came to fill my zone, I said out loud on stream, like, ooh, I'm not really liking the look of these higher time frames. My stop loss ended up being like right down here. Something like, something like that. I can't remember exactly. Maybe close to there. But I would have been immediately stopped out on the trend fail. And then when a trend fails, especially early in the morning with the volume, it's usually an all-day fader. And you can see that my zone ended up being respected later for a short opportunity. I wasn't really interested in doing puts or shorts on this ticker. But yeah, I mean, you see that clear definitive loser. Just for the sake of explanation, my profit targets would have probably been, it's going to be hard to say. I guess the first one would be to scale out at 6. And the next one would be, you're looking for these levels up here. So that would have given you, had you got the bottom of that, close to 20 cents, 17 cents, something like that at your first PT. And then, closer to 30, 35 at your second. But yeah, I mean, I don't like, I'm not upset about how this trade ended up looking. The 5 and the 10 were the signs that the support was probably not going to hold. But, was the plan, kind of a good one? Yeah, I say so. I don't think it was a bad idea. Again, my max risk was my max risk. I knew exactly what I stood to lose. We respect our stops, all that good stuff. So yeah, not a huge issue on that one. I mean, looking at it now, it's like, we unfortunately, we would have, the pullback here would have been the ones. We came for the third pullback. It still had good volume, but just as soon as it collapsed to that pattern, it was done. It was done. So, Yeah, unfortunate. We did take a loser on that one. But the next one ended up being a winner. So we ended up with two winners and a loser. And then I'll talk a little bit about my AMC puts that I took later in the afternoon, just based on what I was looking at. I did post them on Twitter, but we'll talk about it here. I can explain a little bit better. So again, we're talking trend. We're talking trend. I called the zone of 24.3 to 23.5, and that was going to be at 8:59, so 9 o'clock. So that'll be right here. So on this candle here, this big candle up, I made my zone of 24.3 to 23.5. So 24.3 close enough to, what did I say? 23.5. So yeah, gorgeous fill on this one. You obviously didn't get filled in full. But we were discussing, and I've been talking about this a lot, about especially now as the market starts to trend a lot better, that you have to be mindful of really sharp trends like this. You can see how sharp this trend was. And the first instance of significant selling usually will forfeit that trend, right? Because you have way less wiggle room for price to come down to bounce before it's forfeiting that pattern. Now we did end up getting the bounce right here on what would be trendline support, something like it. We got filled, and real quickly you could have taken 80 cents or $1 on that move, and been out. Again, I stress this a lot, that you don't need to hold, especially on these tickers that ran, trade sideways, ran, finally gave you a first pullback. You definitely are not holding for high of day on that first action of pullback. The first significant pullback, you should not believe is going to go to all-time highs or anything. So you would scale out as price started to hit some of these PTs here. I guess my first PT would have been like 24.43. You could have had 26.39, been pretty close. But yeah, real quick dollar move. It didn't even come out the bottom of our zone, so at no point were we risking any significant downside. Now, had I let's take a look at it again here and see what we could have done to potentially, if we were looking for some kind of, first of all, like if you could have taken the zone again for a high day rally, the same exact zone with a complete fill almost to the cent, 24.51. I'm sorry, 23.6. So we were about 10 cents off on the bottom, which is great. That's amazing. I ended up not taking it over here. I don't know, maybe some people who were hanging out on Twitch ended up taking that. I generally will say that if you're going to take a zone as it gets touched twice, to do it with half the size you did it before. That way, if it does go against you, you aren't risking anything besides a little bit of what you have already locked in. Since I tend to believe that the more times the zone is visited, usually if it does pop out, I have lower price targets. Simply because I feel that move has a lower probability. Now in this case, it obviously went to high day, which is great. But I absolutely would have scaled out in full here at this previous high retest, and it did dip right here. But regardless, we didn't take that trade. Let's focus on the one we did, which is right here, right? Honestly, the 5 and the 10, the 5 looks pretty good, right? Because you wick the fill, you come back up, and then the next candle opens up here, and you're like, all right, obviously it eventually goes up before it does come down. In the 10, this candle right here is an indecisive candle. When you have what looks like a dreidel, a spinning top, where it's wick with a body right in the middle, that's a sign of indecision. So I don't know that I would have added to my winner, especially on a secondary rally like this. You usually take your decent little runs. You catch a bounce on the failed secondary high day attempt with obviously way less volume. You see the volume here is decreasing, and you realize that without the volume nearly doubling in size, the odds of you going to a high day rally are pretty unlikely. So yeah, I'd be pretty happy with just taking that trade for what it was. So AMC again, you know how I like my trends. AMC was a good one today to base a trend based strategy on. So similar to yesterday, actually, I took puts against AMC for essentially this exact same move. Now on the 10-minute chart is actually where I based my play off of. I'm gonna leave these up obviously because they're useful to have. But the 10-minute chart here, you're trending. You fail, you reject off of a major indicator like the 200 SMA, a real heavy indicator on a high time frame chart. Gives you faith that as this move is pushed downwards, that this could be the nail in the coffin to collapse the pattern. And it rejects off this key indicator. It comes down here to test the pattern. At the trend line support, I actually take puts, and I scale a little bit into my puts as it comes against me. And then as soon as it collapses the pattern, it sells off. Oops. You can come over here and see that it came up against you a little bit up here. I scaled up all the way to VWAP. It collapsed hard. And once it did collapse, it respected the 20 going down. You broke down through the 200 on the 2. You broke down through the 200 on the 5. Those are good signs for a real quick scalp. I ended up taking what ended up being like $1.50 move on the chart, but was almost a little bit over 100% returns on my puts. So yeah, pretty good trade there. Really low risk too, because you're just risking the pattern. Like if it bounces and starts to go against you and breaks these previous highs, then okay, it's bouncing off support and trending up. You get out of your position. So I took my move right here, and it's either going to go up to trend up or it's going to go down to trend down. I added up to VWAP, giving myself a little bit of room to increase my size and get a better average. Had it popped up over this 53.67 or 54 level, that probably would have been enough confirmation for me that it's bouncing, it's closing above VWAP, all that good stuff. But you can see here on the short-term time frame that it came above it, wicked, got pushed back down. Just like if you're taking it long and you get a wick to fill and it closed above a 20 or a VWAP, the opposite is true for shorts, where a wick above and a push back down means that this was what would be a false breakout essentially, and then you have big sell volume that pushes the ticker down. So right here, I actually just took it from like 52 something down to about 50 and a half, and my options went about 100% on that momentum. I immediately sold for some sweet gains, and that's where I ended the day. So 2 trades in the morning were winners, 1 small loser, 2 big winners, 1 small loser, and then one really solid winner on an AMC option play later in the afternoon. So yeah, really great day, even though I was trading with a baby account, my mom's account with options, and mostly just watching today. We still managed to squeak out some wins, discuss a lot, kind of talk about a lot of our pre-market plan on Twitch and things like that. And I've really been enjoying that. So thank you for everybody who's been joining. Again, if you want to come hang out, anybody is more than welcome to. You do not feel obligated to subscribe or anything like that. It's not what it's for. It's just for us to kind of chill, shoot the shit, discuss a pre-market plan. Kind of, it helps a lot with as I'm talking about what I'm thinking as I'm doing it. There's a lot of things that when I'm trading I don't realize that I'm doing simply because they've become second nature. And I know a lot of people are like, well, how do you do this and how do you do that? And I'm like, you know what? I almost can't put it into words because it's something I've gotten so used to. So when you do watch the Twitch and you do see it like that as it's happening, it is a bit easier of is a bit easier of an explanation process because I'm saying it live as it's happening and I'm just talking about what I'm thinking about. And a lot of times, a lot of that gray area or the confusions or questions people ask, I will inadvertently answer without even realizing it. So, I do. If you enjoying my strategy and you want to learn more about it, I would thumb through those, watch them at double speed, whatever works best for you. Again, you don't have to subscribe. You're more than welcome to stop by just to hang out or whatever. But that's going to be it for me today. It is 12:30 in the morning. I guess technically Saturday now. I've been driving all night after work to come visit my folks up here or down here in San Antonio. And, I'm tuckered out. So I'm going to crash. I hope everybody has a great weekend. I hope everybody ended the week insanely strong. And we'll have a full week of trading next week. I'm very excited about. Hopefully, I'll have all my funds and all that kind of stuff dealt with. And I will see you guys then. But until then, enjoy your weekend. Have a good one, guys. And I'll be around. If you have any questions, feel free to reach out.